The HDB resale market continues to soften with lower cash over valuations or COVs. According to flash data released today by the Singapore Real Estate Exchange or SRX, the overall median COV for November was $8,000. This is a 30.1% fall from the previous month. It's also the first time that COVs have dropped below $10,000 since July 2009. More HDB resale transactions had negative COVs. 13.1% of HDB resale deals closed below valuation in November, up from the 8.5% in October. Sengkang, Choa Chu Kang, Jurong West, Woodlands and Hougang saw the most numbers of negative COV deals in that month. Overall, HDB resale prices dropped 0.6% in November, reaching the lowest level since September 2012. SRX said 1,051 HDB flats were resold in November, down 11.5% from October. Compared to a year ago, resale volumes fell 34%. And I have in studio with me Chris Koh, Director of Chris International, to help crunch numbers. Chris, thanks for joining us. Falling COV prices, zero or negative COVs. What are some reasons for this?
Well, I must say, most market watchers were waiting for this. We did see falling prices, falling valuation, COVs, starting perhaps maybe 2-3 months ago already. What happened was the moment we had new financing guidelines, like the total debt servicing ratio, the mortgage servicing ratio, a lot of buyers had difficulty buying. So the moment you get demand coming down, inevitably you will see prices also adjusting.
So you said the trend that you noticed started 2 to 3 months ago. How long do you think this would continue?
Well, I'm giving maybe another 2 quarters. Historically, we have slow quarters, in the last quarter of the year, the first quarter of the following year. You mustn't forget we have our festivities, and then you have school reopening and then Chinese New Year.
So that usually means less activity,
that's right? Yeah, so again, prices are very determined or are reliant on activities, are reliant on demand. So if you don't see demand in the market, you will see prices softening.
So would you say it is a buyer's market now?
Yes, most definitely. Buyers are spot for choice. You can see them going around, and they will offer you low because they said, if you don't want to sell me at that price, no worries, there's another unit in the next block.
So what's your advice to buyers right now?
Well, if you're upgrading, it's a good time to upgrade. I mean, think about it. If you sell maybe a small flat and previously you could have sold it maybe at 20,000 COV, now you sell it at valuation or below valuation. So one would think, okay, I lost about 20,000. But if you bought something big, like example, a 5-room flat, which was sold maybe at 550,000 at the beginning of this year, but today at 500,000, you actually save 50,000. So minus your 20,000 from the sale of your flat that you thought you had lost, absolutely, in terms of absolute numbers, you've saved 30,000. Perhaps it's a good time to upgrade.
Okay, Chris, thanks for that. Stay with us. I'll need your views on the next set of numbers. Moving on to the private resale market, prices of non-landed residential units fell by 1.5% in November, according to flash data from SRX. This marks the 3rd consecutive monthly drop in the overall resale price index. It's also the lowest price level observed this year, down 4.1% from February's peak. Prices fell for resale transactions across the island, with private homes in the city area contracting by 2%. Prices of resale homes in the city fringe declined 0.7%, while those in suburbia areas dipped 0.9%. About 387 non-landed homes were resold in November, down 22.9% from October. On a year-on-year basis, this represented a 62% drop from the 1,019 units transacted in November 2012. Now, Chris, resale transactions of private homes in the city area, the biggest contraction. Why is that?
Well, you must admit that the prices there are more expensive. And therefore, again, we're facing this problem where a lot of buyers are unable to get loans. So the moment they can't get loans, they will not buy. And in city areas, you must admit that I will need more loan because I'm buying something even bigger. And therefore, like I said, once loans are restricted, that's when the buyers will pull back. And that's why you see falling prices there thanks to a lesser demand.
So would you say this trend is likely to continue, and for how long?
Yes, many of us are again expecting that we're going to see a slow market in this last quarter, a slow market maybe in the first quarter of next year. We hope to see prices consolidate, and then perhaps in the second, third quarter of next year, the activity will come back again, the demand will come back again, and then you'll see prices moving again.
Okay, and finally, what would you tell buyers who are taking into consideration now?
I feel that they need to be financially prudent. Okay. It's easy to say, I found something I like, I want to buy it, but can you get the loan? Can you do your finances right? If you can't get that loan, then perhaps, pull back a little. I can't say it's not the right time to buy. Some people have always asked me, maybe I shouldn't buy now, I should wait. But the house will not wait for you. Sometimes it's a nice property that you like, the price is right, and you're not paying exorbitantly high for it, then go ahead, commit in that purchase.
All right, Chris, thanks for that analysis. Thank you.
Welcome.
And that was Chris Koh with his take on resale property market.